Rockefeller International Chairman Ruchir Sharma joins us this morning. Ruchir, it's great to have you back. Fascinating piece. You look at 20 democracies all around the world and try to explain why their overall approval ratings are so low.
Yeah, Carl, Joe Biden's approval ratings get so much attention here, and rightly so, because they're close to record lows. But what I found remarkable is that if you look at the approval ratings of leaders across the developed world, they have rarely been this low. In fact, they are lower than even Joe Biden's approval ratings. There's not a single leader across the developed world where the approval rating is more than 50%. And most of the approval ratings are trending down. So there's something deep going on here as to why leaders are so unpopular around the world, and why so many of them are probably bound to lose their re-election bid. As I point out in the piece, that normally being the incumbent gave you the advantage. 70% of incumbents would typically end up winning elections when they stood as the head of government. In the last few years, only 30% of people standing for re-election have been coming back to office. So that's what's really going on out here, which is very unpopular leaders, and most voters are deeply unsatisfied with what their choices are.
It's easy to look at social media and sort of the Yelp effect where being negative kind of sells and engages, but are you on the lookout as a result for policy volatility around the world?
Yeah, I think that the big market implication and the economic implication of what's going on, given this, is that the temptation on the part of leaders is just to spend more, to spend their way out of trouble. Typically, in an election year, leaders tend to spend anyway, and I think in a year like this, they are going to be even more inclined to spend because that's the easiest way, they think, for buying votes. The problem is, as you know, in many countries, the budget deficit levels are very high today, much higher than they've ever been. So I think that we are setting up for this tussle here where the politicians need or think they need to spend more, and yet you have the bond markets, I think we'll start worrying about the budget deficits again. Those worries were there last fall, and they faded as the rate cut euphoria set in. I suspect sometime this year, concerns about the wide budget deficits and what unpopular politicians are going to do to try and win their way back, I think is going to be an important clash that's going to happen.
Interesting. So there's a direct correlation then, you believe, between incumbents with low approval ratings and the deficit spending that they tend to run up potentially in their final year in office. So given kind of the overall mantra around the world, what do you think that means? And just to kind of follow up on Carl's question, particularly as it pertains to volatility as we get closer and closer to some of these key elections?
Yeah, I think that the bond markets are going to demand a higher term premium for sure, because in terms of the fact that, once this disinflation trade fades and people factor in the 2% rate that they have, as the Fed's target, I think that rates just don't go back down like they did in the past in disinflation cycles. It's possible that even in a recession this time, the 10-year in the U.S. doesn't fall much below 3% or something. So I think a much higher term premium is what the bond market's going to demand. And politicians, I think, are going to learn the hard way that if they're going to try and spend too much, the bond market's going to revolt against it because the levels are so high. The deficit levels everywhere are so much higher, and the U.S. is obviously exhibit A in that.